Warning, this show is not, I repeat, not financial advice. It is a review of my adventures into stock trading and for entertainment purposes only. Investing carries extreme financial and emotional risk. Do not attempt to recreate anything you see. Today is July 13, 2025, and this is episode 8. Hello, and hope all is well. It's been a little bit, and good to be back. Let's start with the story so far style recap. I started this adventure with about $780, and I'm currently building my investment capital, with the long-term goal of trading for a living. Well, or at least to make it a decent part of my income. In the last episode, I talked about me having officially moved on from day trading. I'm now focused on short-term trading instead, which makes way more sense for my situation. With as much as I have going on, day trading just isn't feasible. Running my own marketing business, writing and illustrating my own comic strip, and working on another YouTube channel. Oh yeah, and not to mention, just enjoying some R&R and family time. It's just not enough hours in the day. So anyway, that's the quick recap, and let's dive into my trade review. For my last trade, I bought QBTS, otherwise known as D-Wave Quantum Inc. Since I'd done so well with them in a previous trade, I figured I would give it another go. If you don't know about them, D-Wave builds quantum computers which solve very specific and extremely hard problems that traditional computers struggle with. Yeah, like this laptop right here couldn't do it. Anyway, D-Wave's computers are designed to figure out crazy stuff like optimizing delivery routes for companies like UPS, planning manufacturing schedules, drug discovery and protein folding, traffic flow simulation. You get the idea. They do some crazy stuff. So I clicked the buy button for 55 shares, just like you should click the subscribe button to my channel right now. I got in at $17.05 a share on June 10. As you can see from the chart, I bought a little high, and it has been mostly a downward trend until July, when it's finally started picking back up. July 8, I had a very small window to sell and break even. I was actually actively watching the stock that morning, and I could have made a live trade, but I decided to hold for a couple of reasons. Though I did buy in higher than I would have liked, $17.05 is not that high in the grand scheme of things. I feel like a little push and the stock will easily jump to $17.55 or better. Second, their Q2 earnings are coming up in the first week of August. That means there's going to be some volatility ahead, and the perfect opportunity to meet or beat my target of $17.55, especially with the stock having been over $20 not that very long ago. So that's where I'm at with QBTS. It's a bit of a waiting game right now, but that's okay. Remember, my number one goal is to get positive outcomes for every single trade. So waiting a little bit and avoiding FOMO is always the way to go. No FOMO ever. It screwed me in the past. Anyway, while we're waiting for QBTS, I have been doing some homework, and that is a perfect segue to my stock hunt. Stock Hunt is brought to you by me and my webcomic called Bello. It's a comic strip set in a small deli that focuses on the humorous banter between Bello, his co-workers, and their customers. I publish every Monday, Wednesday, and Friday, and you can find it on your social of choice or at bellobear.com. All the links are below. I hope you enjoy reading it as much as I do creating it. Okay, back to the show. In this segment, I usually pick a stock to investigate and add it to my long-term watch list. Today, we're going to do something a little different, and we're going to look at an industry, which ultimately will lead us to a few stocks to check out. Look, I'm not one for politics, picking sides, and all of that madness. Quite frankly, I avoid politics like the plague. That said, I want to bring up something from the Big Beautiful Bill. One way or another, we've all heard about it at this point, and it could be something we can use for stock trading. In the bill, section 70114, it states the following about wagering losses. For the purposes of losses from wagering transactions, the amount allowed as a deduction shall be equal to 90% of the amount of such losses, and shall be allowed only to the extent of the gains from such transactions. Wow, that's a really big deal for anyone who gambles. So what does it mean, and why do we care? Aren't we supposed to be talking about stocks? Yes, and here's the point of why it's important. So say you or I went to the casino, and we hit a nice jackpot of 100K. Of course, we're liable to pay tax on our winnings, which is totally standard stuff. So we got our 100K and we have to pay state taxes and federal taxes. But before we do, we can write off our losses against our winnings. So let's say I'm a degenerate gambler and I end up losing everything I won. So 100K in and 100K out. Sucks, right? But I figure, hey, I started with zero, I ended up with zero, and I had a good time. But not so fast. Because of this bill, even though I have $0 in my pocket, the federal government says I still owe them taxes on $10,000 of my winnings, even though I don't have a cent left. So why do we care? Well, this news is spreading from the professional gambling community, who's already in an uproar, and it's making its way to the retail gambling community. The bottom line is, it'll make everyone less inclined to gamble, which will obviously affect gambling-related stocks like DraftKings, Rush Street Interactive, PENN Entertainment, and Flutter Entertainment. Of course, there are plenty of other gambling companies, but I'm focusing on these because 1, they are publicly traded, and 2, their main focus is gambling. I'm staying away from other companies like Caesars and MGM because they have lots of other business interests besides gambling. So let's take a look at their 180-day charts, starting with DraftKings. At the beginning of the year, they picked up some steam and hit a high of $54 plus, which makes sense as this was right around the time of the Super Bowl, and all the online sportsbooks were cleaning house. It did come back down within a couple of months, hitting a 180-day low of $29. The last couple of weeks, it's been hanging around $40 to $44. For me, I'd like to get in around $36, maybe a little higher. Next, let's look at Rush Street Interactive. They are the force behind BetRivers, and their stock ticker is RSI. Pricing is a little different, but their 180-day chart is not too dissimilar to DraftKings. They peaked right around the Super Bowl like all the sports books did. If anything, I think there's a little bit less volatility compared to DK. And based on the price range, to me, I'm thinking the ideal place to buy in is around $12. Moving on to the company behind ESPN Bet, PENN Entertainment. PENN has a similar trend to the others. Their high was $23.20 and the low was $13.25. That's almost a full $10 swing in April. It has been on a slow and steady increase, getting to over $19 just a few days ago. Price-wise, I'd like to get in around $14, maybe a little more. To add a side note, one thing I do like about PENN is that they have ESPN to help market the business. Not sure that makes a huge difference in the sports betting world because people seem to tend to just go for who has the biggest sign-up bonuses. But it's worth mentioning. Finally, let's wrap it up with Flutter Entertainment, aka FanDuel, aka stock symbol FLUT. Again, similar fluctuations with the Super Bowl and all that, but the stock price is in a whole other ballpark, and quite frankly, I can't afford it. That said, I do think it's worth looking at as it does support the trend of the others. Assuming the bill causes the betting industry to drop as a whole, which I think it will, I will definitely be investing in one of these, as long as I can get the buy-in price I want. So I'm adding all 4 of these to my long-term watch list. And that completes my stock hunt for this episode. Usually we dive into my shortlist next, but since I'm still holding QBTS, instead, we'll just get to the bottom line. Before we close, please click that like button right now. It's the one with the thumbs up on it. It really helps with the YouTube algorithm, and you can actively help my channel grow. It means the world to me, as I really love doing these videos. So what's the bottom line? As you know, I started this adventure with $780. Well, more specifically with $783.26. At the time of shooting this, I'm at $832.57. That's down a little bit from where I was after the last trade, but I'm still up overall. And obviously I'm not selling QBTS until I can get my sell price and make it worth it. If you want to be notified when that happens, hit the subscribe button right now. Well, that's it for today. Thank you very much for watching and stay tuned for more of my adventures into short-term trading. Okay, bye.